Good morning to you once again, and we still continue on with Morning at NTV Tuesday's edition, looking at the proposed changes for the financial system and of course the adjustments there to traditional money lenders' loan structures that are already in existence, and the law on interest rates in Uganda. And of course the contention in there is on money lenders versus some institutions that should be facing the wrath of this new bill. Anyway, the backbone of it is that last week Parliament did pass a tire for microfinance institutions and money lenders bill 2024 that has caused a lot of concern among the stakeholders in the country's financial system. Now, the motion was moved by Bunyole East Member of Parliament Yusul Mutembuli, who is now awaiting the presidential's assent. Of course, looking at it, money lenders are quizzical about government's intention on this notion that even the banks that take deposits from customers haven't been capped in this regard, especially on the conversation around interest rates. And so it begs the question why the microfinance institutions and not these other institutions by and large that do ideally quote unquote more work. However, the question is how this move is to improve the law and the solution to Uganda's financial struggles, as well as improving the financial system and sector by and large in Uganda. Now, when you look at the early 90s, the government did carry out a comprehensive review of Uganda's banking sector. The sector was fully liberalized, allowing for more private sector players to participate. Today, when you look at Uganda's banking sector, it is more open, it's more dynamic with high prudential standards, more effective and efficient with an improved service quality, and of course product ranges coming up day in and day out. Well, I do have stakeholders with me in studio to have this discussion. On my extreme left, I do have Allan Tayebwa, who's the Managing Director, Goldmine Finance, a Tier 4 microfinance institution. Good morning to you and welcome to the conversation.
Good morning, thank you.
It's a pleasure to have you. And then we also do have Ezra Byakutanga. He's an economist, and of course you can see he's already penning down things that he's here to discuss with us. Good morning to you, Ezra.
Good morning, Priscilla.
How are you? Nice to meet you. Now, let's get into the nitty-gritty. Parliament, even with the coffee situation in Parliament last week, there was still room enough to pass this Tier 4 microfinance institutions and money lenders bill. Let's get a breakdown of the clauses that have been amended or re-edited for this particular bill. Let me start with you, Ezra.
Thank you so much, Priscilla. Good morning, our viewers. I think the major highlight is, of course, to start with, I want to mention that our problem as a country is not the policies or the laws. We have a lot of good performing laws. Our problem has always been the implementation. And I think I read the report of the Parliamentary Committee on economy and development, and the major highlight in this amendment is evoking section, I think 89, which talks about the interest rate, the discussion of the cap, the maximum cap. The minister, in consultation with the Uganda regulatory authority, microfinance regulatory authority, that over time they will discuss the interest rate. In other words, put a cap on how much interest that the money lenders and microfinance institutions should put on the loans that they give out. But for me as an economist, Priscilla, I would say to discuss money lending in isolation is a disservice. Okay. We need to talk about the entire financial sector as a whole. Because, like you said, in the early 1987, thereabout, there was funding from the World Bank to do some diagnostic studies on the financial sector in Uganda, and that saw a lot of local banks here in our country be taken over. And I think patriotic Ugandans, if not Africans, should be keen. And I want to quote one of the brains that has shaped our economy, Professor Ezra Byakutanga, who said that one who controls the banks controls your access. So if we have a banking sector, a financial sector where it is majorly dominated by foreigners. I think to discuss money lenders who are our brothers and sisters is quite unfair. But that said, government is in a difficult position because true, the money lenders are not apologetic. Their interest rates are very high. On average, it is 10% per month. And who are the clients of these money lenders? Majority of the clients of money lenders are people who are in the informal sector. They are young people who cannot afford collateral and security to go to the banks and get fair loans. But how fair are they? So for me, I think with the liberalization of the financial sector in Uganda, money lenders have a right to decide on what interest rate they charge on their money. But also government has a task to protect its citizens from being extorted. So in that position, what do we do? I think it's high time. Again, I'll quote Ezra Byakutanga. He is one of the brains that we have that have been very instrumental in structuring and shaping most of our policies, economic reforms. And he says Ugandans will remain very poor if they don't own their own bank. Or they risk being prepared, remaining laborers. Those who will not be employed, so if they are not laborers, they will be unemployed beggars. And the rest of the people shall go to Arab countries and the rest of the world to be slaves.
Which is the reality.
Which is the reality.
Yeah.
So I will say, Priscilla, that we have so much to do. Money lending have just manipulated, they have taken in research. One of the biggest tasks that we have to do is to identify what the problem is. So for me, with the amendment of the bill and so on and so forth, is that the problem? The problem that we should be asking ourselves is, why even with these harsh conditions, why are people still going to money lenders? And who are these? These are not the rich.
Yeah, that's very true.
These are young people, many unemployed young people who are struggling to put in action what they think they can benefit from and make a livelihood from. These are people in the market. When you go to Kalerwe market, where I come from in Triandongo, and that will lead me to another thing, social security. People don't have social services. People don't have health. So people where I come from in Triandongo, you get a call, your child has been sent from school, then you have no option. Tomorrow is the
out of pocket.
Tomorrow is exams, so you run to the money lender. You've gotten an accident, your loved one is sick, abruptly they run. So this speaks to proper planning for a country. I appreciate that government is coming in to do their role of protecting its citizens and making sure there is the president keeps saying prosperity for all. Prosperity for all. Prosperity for, but
now, when we look at this bill, allow me to bring in our other stakeholder who is directly into this line of business. You have had the privilege of perusing through the bill, and it begs the question from where you are seated, what are the pros and the cons that do exist in this bill?
So, one of the advantages that the government or parliament did was to bring in place the Tier 4 Microfinance and Money Lenders Act of 2016, because it helped to answer very many issues. One, it brought in place an authority, and two, it was able to clarify between the issues that the previous law had. Mind you, the previous law had been enacted in 1969. And secondly, that law capped interest rates to 24%. Do you know what that did? It instead enabled the black market economy, if I can say. Many of the lenders were underground. No one was licensed. Do you know what they did? They signed sale agreements. If you came to borrow 10 million shillings and they would tell you 20% per month, remember the law said 24% per annum. What they would do, they would get the 10 million shillings put the 20% for the 1 month and say you've borrowed 12 million shillings at 2% per month. Why? They were trying to be creative and work within the law. That is those ones who actually signed loan agreements. The other ones signed sale agreements. Now, what the act that came in 2016 did for us, it helped to create a sort of ethical business of money lending, to make sure that the licensed money lender is able to clearly say, I have lent you 10 million shillings at 20%, because you are not forced to come for that money from that money lender. Now, what Parliament has chosen to do or chosen to believe is, let me ask you, my friend, if you have kwashako, okay, would you say reduce on the amount of sweet potatoes you're eating?
No.
You cannot. You cannot say we are going to cap the sweet potatoes you're eating 5 a day. Now you're going to eat 2. No, you're still malnourished. What we are saying is create a balanced diet. Instead of saying this is the rate. No, because one, you're not giving me money to lend at. How do you then come and say lend at this rate? On what grounds? Have you considered the conditions? Because this is what they have failed to do. Because I believe leadership is supposed to be dealing with things in a wholesome perspective, not in a singular perspective. Because even the Bible says that the first one to plead his cause seems right until the other one starts to speak up. You understand? Because it is true there is a problem. That is very clear to everyone to see. The question is, we are not diagnosing
what is the problem,
the real problem. We are dealing with the surface problem, the symptom. We cannot deal with the symptom because the very people who complain about the money lenders, and mind you, by the way, I want to tell you that most of the people they are complaining about, most of the lenders in Uganda, wherever, are not licensed. One, they do not know what the law says or what it doesn't say. Now, what they are trying to deal with is a solution for the unlicensed lender, but who this act is not speaking to.
Yeah, because they're not, recognized within the system. Precisely. They are not under the regulation. They're the authority. So in any, their business will still continue, and they'll be charging whatever interest rates that they want. Okay, so on the other side, then what's the flip side of this bill? Is it really helping you in any way?
No.
Were you consulted when this bill was being amended?
When the bill was being amended, there was no consultation, really. I thought, actually, that the main thing was what they were trying to do was move UMRA into the Ministry of Finance. Really, this whole thing that has been going on, the merging of agencies. However, the unfortunate part for me is that, one, we were not consulted. Two, they've not included any solutions for the money lender. Now, that's very critical because the money lending business is not going to go away.
So the solution is quote-unquote protecting the borrower.
You could say that, but actually it's killing the borrower. Because you see, the money lender is filling a gap. There is a gap in the market. Which gap is being filled by this money lender? Now, if you do this, you're taking them back to the law that was enacted in 1969, where they were operating under the radar. That is the biggest problem. Even right now, today, UMRA has only licensed less than 2,000 money lending institutions. 2,000. There are more than 50,000 money lenders in this country. Now, I can tell you that actually majority of the money lenders are people seated in offices. Okay. All the people in offices are money lenders. But do you know what they do?
Yes, we are.
What it is going to do, what this law is going to do, is encourage more sale agreements. People to do business that is illegal or unethical, because they're already doing it anyway. The biggest issue that people are worried about was not even the capping of interest rates. Do you know what they were worried about? Being licensed? Why they were refusing to be licensed? Was because of URA. They thought that URA would come out and get them. Now, we were trying to educate people and get them into legally running business. Now, unfortunately, they've just killed everything that had been done by UMRA for the last 4 years.
Yes, please.
Priscilla, maybe if I can make a rejoinder. I agree with Tayebwa, my brother, when he says there is a gap. And that is why, for me, from the economics perspective, I would say, what is, government does not, these laws are just painkillers.
Okay, first wait. You do agree that there's a gap?
There is a gap.
Let's stipulate what that gap
in the financial
is exactly.
gap. Priscilla, before we had indigenous banks. I'll pick particular interest in the Uganda Cooperative Bank that was abolished by Bank of Uganda on account of, I think in 1999, on account of insolvency. And Uganda Commercial Bank, which is no more. What are the alternatives? The money lenders can be dealt with if the effort to steer up wealth creation among the people and support themselves, a sustainable development within the people is put right. And this is by empowering our own society-based, local-based financial institutions. The Uganda Cooperative Bank would be the best option here. The Uganda Commercial Bank where farmers will go there, and even, I mean, they don't have a reason to go to, they don't have to go to these international foreign companies, foreign banks. They don't, because their requirements for the loans are huge. Some of them offer salary loans. We know we are struggling with unemployment. Young people are here are unemployed. So if you say salary loans, they don't have no assets. Even those that have land in this country, majority of them don't have land titles. So for me, I think it is appropriate for government to start thinking about alternatives. Other than giving the laws, yes, like he said, indeed, the black market is going to resume in the financial sector. Many people are giving loans, even in the current state. Like he said, they are giving loans, but it's not documented. So how does the economy benefit? How is it feeding into, in other words, we have a bigger informal sector in the money lending sector. So how is the economy benefiting? How is URA tracing these people, their incomes and how are they bringing back?
How can they trace them when they're not existing?
So we need to move away from the painkillers, from the implementation of the laws, and get to the actual problem of solving poverty among the people.
All right. For the case of Allan, you talk about how this is not favoring money lenders in any way. How should it actually be enabling money lenders? What are the plights, what are some of those challenges that you wish and hope that government could actually be focal about and be inclusive within such a bill? Yeah, so there are two solutions, I believe, really very fundamental in a way. Number one is financing. You know, the biggest thing is that people do not know. Have you ever asked yourself, where do these people get their money from? Because in the banks, majority of the banks can never lend to a money lender. Never. Two, it is own savings. But own savings are not enough in this sector, really, because you need a lot more capital to be able to lend out. So what do? They will come to a person like you and me, Priscilla, and say, I want you to lend me money to go and on lend. What rate do you think you're going to ask them for? Remember, government is borrowing at 18% in bonds. Banks are borrowing at 15%. Now, to a money lender, they are going to lend him at probably 5% per month. Meaning, if he's borrowing at 5% per month, how much can he lend out to make a profit? Yeah. Now, if between you and me, if you have a friend who has ever lent out money, they tell you they will never ever do the business of money lending. Do you know why? Because of the risks. Because people do not pay. Yes. Now, that alone is a big burden. So you manage the risk by having a high interest rate, so that at least you can do as much recovery as possible. Okay? Yeah. You've borrowed at 5% per month. You have got a risk on top of that. Yeah. And what I always say is the person who pays in borrowing, in loans, the one who pays for the ones who default. It's unfortunate because you have got to cover up that gap. Now, you've got that risk. Minimum, like you said, you're going to charge 10%. Now, why? Because you've got limited capital, you've got high costs of financing, but number three, and most importantly also, people are financially illiterate. Financial illiteracy is expensive. We don't put a cost to it, but it's quite expensive because of the financial literacy, both on the borrower and on the lender. There has got, because you see, there's supposed to be, I personally
agree that the rates are extremely high. I agree with what the government is saying and what the message is clear. But the solution cannot be to cap the rate. We've got to open our eyes. The solution has got to be offer alternatives. The president was clear about this. Emioga, PDM, all those were alternative sources of financing.
Yeah, but you see the alternative sources of financing you're talking about, half of that money ends up in pockets of those that are supporting that system, the systems that you're talking about. So really, how does it alleviate poverty that Ezra was talking about here? Anyway, away from that, there's also the questions in the dynamics, microfinances versus there's deposit-taking institutions. Why not them? Why are they focusing on money lenders, Ezra?
I said in the beginning that our financial sector is dominated by foreign banks. You see, have you ever asked yourself, even with this law, I am afraid that we are going to have a law, but it is not going to really make a lot of sense. We have our supervising authority, the Bank of Uganda, the central bank is the supervising authority of all commercial banks. But in many occasions, and I'll pick one, for example, in the COVID-19 period, the central bank lowered the central bank rate. What that means is that commercial banks, in turn, should be able to reduce their interest rate. That was not seen. That didn't happen. Why is this happening? Our central bank works mostly on the demands of the other international funding authorities, bodies, the IMF and World Bank. And like I said, they were the reason for the dissolution and closure of our indigenous banks. So why them? They are the powers that be in the financial sector. They are the biggest shareholders. So their bargaining power is higher than we can imagine. So what are we left? We are left to be vulnerable. And my worry is about, he made mention about these programs that have been enrolled. Often at times, these programs become more political than, and they lose the original aims of what they should be. I will tell you, because I'm a student of economics, and so the architects of the PDM imagined parish level banks. This would offer an alternative. You beat the money lenders even in my imagination. The people who should go to money lenders should be people who are capable, business people. 10%, you're going to take a loan of 10% because you know this money you're taking. This person has enough financial literacy. They are taking the 10% and it's going to make 20% or 30% in 1 month. So there will be. So we often at times deviate from how these programs should be run. And the earlier the president and the powers that be realize this, the better for the citizens. If we start to give people $1 million shillings in cash, and you're going to come back, there is no proper monitoring system. These people who are supposed to monitor are the ones getting money from them. The president was in Bukedia.
Even the one that they pass through the financial institutions,
so
still
just
minus the transaction fees. So by the time you add the 1 million it's supposed to get to you, you're getting less than the 1 million.
The worst bit, Priscilla, is that this one person receiving the 1 million shilling is hungry. The season didn't go well.
Yeah.
And they are farming on an acre of land, and they are hungry. So what do you do if you are the one? So the president already saw in this recent monitoring tour of the PDM, he highlighted the major risk to be corruption. He was regretting and saying, lamenting and saying, why these LC3s and local political leaders have motorcycles and why are they not monitoring? But I think the solution is not in trusting these people to do the monitoring. It is in empowering the institutions to do exactly what their original purpose was.
Okay.
The architects of the PDM imagined that this 100 million should go to the parish, and there is a parish bank there. These people in the informal sector will then, instead of opting for the money lenders and pushing the money lenders to go into the black market, they will have no reason to go there. They will go to these banks, they will lend them money at a lower rate, instead of giving it to them, and when they give them to them, they say, no, our political leaders have appreciated us for supporting them. In this case, they will say, the NRM has supported us. And political leaders will come back to lie to the president. Me, I think it is more important for us to listen to these technical advices, and then we empower our people. And for me, I think local banks and these maybe sort of, for example, the parish level banks, this would help, because you have a fully fledged financial institution by government that is giving
the kind of ones you're opening up is not realistic, because it still comes down to government expenditure, which at the end of the day they're also trying to minimize on their side. But anyway, you talked about the politics in all of this, and there's some people that are of the view that there's some politics to this bill in particular. Given that we're going towards the electoral cycle, members of parliament tend to borrow a lot of money in order to either get into parliament or save their seats in parliament. And so maybe that could be something that will protect them as that time is coming around the corner.
I think what I would like to really bring out is, first of all, why do people even go to money lenders? That's a very critical question that has never been addressed. Because if it is simple, people are poor and they have no alternative. If they could,
according to you, but not all those that go there are poor.
By the majority are rich.
Exactly, because they need money to sort out something that is of value.
And what I will tell you, one of the biggest issues around money lending, one is turnaround time. If you went to the bank, it will take you on average 3 months to get money. People's needs, remember, people are always dealing in emergencies. People need money yesterday when they need to borrow money. Now that gap is a very huge gap. Number one. Number two, they cannot easily access even the money in the bank, the loans. It's very difficult to go to the bank and borrow money. You must have really, and rightfully so, because the bank is trying to weigh its risks. Now, my concern here is, one of the things that you asked the question about around parliamentarians and 2026. Let us watch the space. I can guarantee you. Did you know that themselves, these members of parliament, sign sale agreements when borrowing? Okay? Now, they do sign, because when you need money, you don't care what you're signing for these people. And that's where government needs to protect the borrowers.
Citizens, yes.
Okay? Why do they, but what they are doing, they're missing the point. Let me tell you, my friend, UMRA, the regulator, which was brought into law in 2016, 2017 by this law, only has got 35 employees. Now, with 35 employees regulating close to 1,700 institutions around the country, it's not simple mathematics. That the problem is not even the lender.
With underfunding.
It is just underfunding. They are not really empowering the regulator. Even if they move it to Ministry of Finance, they are simply going to encourage corruption. Because do you know that while UMRA, I agree, I understand, UMRA really did a fair job. Despite being underfunded, they have been able to pull off a very good, they've done something tremendous, because in their office, they've got a complaints handling desk that basically all these people who have got issues, they will come and be able to refer to the desk. And once UMRA indeed verifies that you, the lender, has been either charging exorbitant rates or you've been cheating, signing sale agreements, they will not issue you a license in the next financial year until you've been able to solve these issues of yours. Because the issue is not to kill, it is to enable and try to correct, to create a fair, balanced environment. Now, if, for example, they have been, now that is for the person who is licensed, but for the other people, they encourage borrowers. Ensure that before you borrow, make sure that that license is up there.
Yeah, but you see now, on the issue of that license, and I see a lot of this cropping up, especially in you know, lower class to middle class ranges, people who are in arcades and what, you're seated there and some person dressed in maybe a Goldmine shirt comes and tells you, well, you see, now we have this chiwina, give us money on a daily, you pay 2,000 shillings monthly at an interest rate. Sometime it happened to my friend and I was in the room and I helped her do the mathematics to realize that, do you know how much you're going to be paying back? It's an arm and a leg. That's a lot of money. That's when her eyes were opened at it. But then when you look, if they were to bring them paperwork, you know, to just verify that they're authentic, NASA Road does exist, you know, and so people can go and fake documents and bring them in order to lure people into this business so that the moneylender makes a killing of it. How do we manage that situation? Is it covered in this bill?
Yes. You see, it is illegal. It is criminal to do business illegally. Okay? Now, if I come to you, first of all, I need to be educated. You see, all we need is to make as much awareness as possible about who a moneylender is and who is not a moneylender. Because, and you bring out a very good point, because if we are not educating people about, one, do not sign a sale agreement when borrowing. It is illegal, for heaven's sake. You have not sold the property. You have only borrowed money against it. Two, we also need to educate the moneylender about why they don't need to sign a sale agreement. Because you see, it's a two-way thing. But number two, as well, we need to be able to, because you see, what they, and really I like to compare the previous act and the current act which came into law in 2016. Because did you know that while the previous act capped interest rates at 24%, it did not allow these moneylenders to advertise. Now, already you can imagine, you're not allowing the person to advertise and you're also capping their interest rates. What you're saying is basically to encourage that kind of conversation you just talked about. Now, if you allow these lenders, educate the lenders, educate the borrowers, that message is missing out there. Three, first of all, I'll tell you, we lend to these money lenders, but we lend to them at what rate? At 3% per month. Do you know why? Because we borrow this money at 25% per month. Now, if I borrow it at 25 and I lend it at 36, what rate is going to lend it at?
45.
Right?
So,
because we have got...
I just want to Allan here made mention of, he posed a very important question, which I think stakeholders should pay keen interest in, even before I come to that political and 2021, 2026 elections and MPs and the money lenders. Why do people continue to go to money lenders? And I think for me, again, I will not concentrate so much on the operations of the money lending. I want to give the economic perspective. International or foreign-owned banks, remember, we are still dealing with neocolonialism, and it is more than real now. And in my opinion, the view of having to abolish indigenous banks was for foreign banks, foreign-owned banks to deny access to capital and make it very expensive for Ugandans to own or access capital. Why do people still go to money lenders? He made mention of emergencies. The people have demands and have emergencies, and as a human being, most of these pressing emergencies are the ones that come from basic needs. If you don't have basic needs, you will die. If you don't have medication, and that speaks to what are we doing? Are we having a national insurance, a functional national health insurance scheme, for example? Are we making, yes, the NRM came with the Bonaba Some UPE, which helped. Then I think, I don't know, as generations evolve, I think people are becoming, everyone it is to whom it may concern. But the UPEs then made people benefited, but not anymore. Not anymore. The service delivery there is very poor. So why do people still go to money lenders even with the harsh conditions? The foreigners have taken away have denied us, Ugandans, access to capital.
All right.
We are not making money.
So away from that, there's the emphasis being on money lenders, and yet they struggle to get their capital sources of, you know, this money that they lend to. Unlike the deposit-taking institutions, where you do get the support from central bank and, of course, from their customers, it begs the question then, how do we protect the money lender? What should be put in place in terms of regulations and policies that can enable the environment for the money lender?
In my view, money lenders, of course, like any other business, it is a voluntary venture. You decide to join the money lending business. Whereas government has already protected them by liberalizing the financial economy and not saying no one, the government is not saying no one should involve in money lending. But they are saying, no, we need to cap the interest rate that these people are getting from Ugandans. And I think that is proper, although government from the onset should have come as they liberalize the economy, because it is not proper for you to say we are liberalizing, so people should get their money and invest it. And I was reading the comments, the perspective of the Uganda Money Lenders Association. They are saying, you are not giving us interest. Like he's saying, these money lenders perhaps are borrowing. But whereas we want to understand the money lenders, at what cost are we understanding them? Yes, it is voluntary. Let us, government is liberalizing, let them allow them. But it should be to the task of the money lenders now to identify their clients who can comfortably do their, like I said, if the MPs are going to for an election and they are coming for, that is the best, those are the best clients. Let us educate the money lenders.
Yeah, but
and then
this thing about education, honestly, Alan, did you enter this business to educate people or to make money?
That's right. I entered the business to make money.
Yes.
But there are rules of the
but
game.
now you have to suffer the cost of saving and protecting your money by then engaging in financial literacy education.
Yes, but who is supposed to educate? One, it would be, I would imagine, the Money Lenders Association together with the authority. It has got to be a cost from the authority. It cannot be the cost of the lender. But again, how are people? And you see, Priscilla, this is what I think, you know, we've got a certain perspective of a money lender. You think it is this mean person, very gloomy. It can be a person who is as good looking as Mr. Ezra here, or as you, as yourself. Do you know how you get in? As long as you've got a friend who will come to you and say, I want you to lend me money. And themselves, they can even propose to you the amount they are going to pay you in interest. You have not done any wrong thing with that friend. The only problem comes at the point of paying
back.
When that friend of yours begins to go around saying how you have you charged them a lot of money, and yet you willingly gave it to them, and they probably even are the ones who told you how much they were going to give you in interest. Time has come and they've not paid. So I think there is a bit of a, this is how people even enter this money lending business. This is how majority of the people in the money lending business, because majority of them are lending to family and friends. The only problem, people forget that the money lending business as a business is a very complicated business. But why is it complicated as compared to banks and whatever? It is because it is mostly relations, people with relations. Those are the ones you're dealing with. Therefore, it's a
lot of referrals. No. Goldmine is good. You come and we go.
You know? So it's got a lot of that. And because of that, people lend based on those relations, not based on facts, not based on due diligence that is being done.
Right. So the capping comes in just timely for that. Okay. Something else that we want to talk about. You talked about the sales agreement. I think this is an opportune time to have the education and financial literacy as far as money lending is concerned. Why shouldn't I sign a sales agreement?
Very simple reasoning. You have not sold. The thing with the sales agreement, it creates very bad business practice, because while you have signed a sales agreement, you're at my mercy in the unlikely event that you want to pay back. Because I may want I could be interested in your property and I do not want to let it go. So at the point of paying, I may choose to say no, I am taking the property. Or I may, like they used to say those days, switch off my phones, which is not right. Because it's not true that you have sold to me the property. What is true is that you have taken my money and you've borrowed it. So why you choose not to, you should not sign a sale agreement is because you have not sold. It's just as fair as that, as basic as that.
Why shouldn't I make my borrower sign a sales agreement?
Why you should? No, because you see, one, what we've always told these lenders is, you're not in this business only for that transaction. You're in this business for a longer term. Now, if you're in the business for a longer term, there are advantages. The law protects you if you've used a caveat or a mortgage. However, actually what we also forget, my friend, is that many of these borrowers, many of these even lenders, do not really know about the laws and how they protect them. That's one of the other things. That's why we talk about,
which is encapped in the literacy side of things.
Yes.
Okay, Ezra, as we close this conversation, what's the way forward? How do we protect the sector? How do we protect the money lender in all of this?
How we protect the money lender is let us give capital. Let government protect the vulnerable borrowers. The proportion of when I mentioned that most of the people who are borrowing from money lenders are vulnerable young people, many young people who don't have how to access capital, are unemployed, get frustrated and end up in money lending to start a particular business. So what should government do, in my opinion? We are operating a liberalized economy. Let the money lenders be. Yes, we have a few, we have a regulatory authority, we have the laws in place, but I don't agree with the perspective of government saying, let us cap the interest.
Okay.
But I'm saying, when I've said financial literacy, these money lenders should know who are their very good clients. Who are these clients that can work with them at their terms and they are convenient with them? Right. For us as government, for us as the citizens, should benefit from the effort of government availing capital to us, as long as people don't have money. And I was noting down something here. What money lending? Why is, you know, if you look at the statistics, money lending has grown from what it was. The proportion of people engaging
directly,
it has grown from 2016 when this law, the earlier law was put in place, to today. Why?
Okay.
Income inequality. We have a problem with income inequality,
which is
and
a
we are
problem
making it even wider.
Yeah, which is a problem that primarily should be bandaged by government, by and large. Well, gentlemen, thank you so much for your submissions to these conversations, and we hope for a better future as far as protection of all entities and stakeholders are concerned in the financial system of Uganda. This brings us to the end of this conversation. Now, when we return from the break, KCCA and councillors were uproar in regards to budgetary alignments and discrepancies that were within the authority seating. Now, we're going to be having a sit down with the Mayor for Kawempe Division to give us perspective and insight depth into that. Then we're also going to be joined by Herbert Kamoga, who is in Luero. Now, Luero has become a hot spot for mob justice, for crime and then mob justice. So anyone who commits a crime, the citizens and locals will take the matters into their own hands. But these people, most cases, it has turned up into death. Most recent scenario has been in the last 24 hours, which happened near a police post. And so he'll be talking to us about those details. Those coming up. Do stay with us.